these really, really big companies like SoftBank, they're coming in and buying. And it makes me wonder who else is doing this in the shadows.
More companies should pay attention to these developments. I mean, only reason I can think of it is because they're intellectually lazy. They don't fully understand Bitcoin.
Recession in the summer of 2025.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Hello, this is the Presto Research Podcast. We have Peter and Rick again. This week, it was a bit moderate. I think price action was not too dramatic. I feel a little bit relieved since we're protecting that 94K support. So I think people are kind of complaining that it's Michael Saylor all again that's buying the Bitcoin, but there were some other comments about who's really buying because the ETF flows were not very good in terms of inflows. And I also watched this interview from this Coinbase guy. He's like the head of institutional strategy. And he was saying that sovereigns and these funds who missed out on the gold trade are trying to buy Bitcoin because they think that has very similar characteristics to gold. But besides that, we have some other news where Jack Mallers from Strike, the Lightning payment app, he is being funded by these big companies, and he basically propped up another company called 21, which is basically a company that will buy a bunch of Bitcoin. And I think they have around like 42,000 Bitcoin under their name right now. And yeah, this trend has been accelerating, it seems. So what do you think about it? Do you think we're getting more of these funds in the future? Like, what are your immediate thoughts on 21?
Yeah, so when I heard this news, I thought it was just going to be another. Well, there's been quite a few other companies who's been trying to copy MicroStrategy's treasury, right? So MicroStrategy's strategy. So I thought it's just going to be another one of those. But when I took a closer look at it, there are some differences that I think are meaningful. One of them is that it's going to be a pure play. I think if you look at the other copycats, they usually have some legacy business because when they got listed, they were listed as a legitimate like operational entities. So either like in the case of MetaPlanet in Japan, I think they were operating hotel chains, so on and so forth. This one is just it has nothing in it, no legacy business. It's right from the start. All they're going to do is just accumulate Bitcoin. That's number one. Number two is I think they are trying to position themselves as someone who can deliver the Bitcoin exposure in a more simpler way. So I think if you look at the MicroStrategy's capital structure or the balance sheet, there are many. They've been issuing a lot of instruments to raise money from the public market, and the convertible bonds, obviously the most high-profile ones, but they also recently been doing preferred equity issuance. Also, they've been issuing equities. They have some other debts as well from the legacy business. So it's a little bit more complicated structure, but I think the 21 is going to simplify it, and I think they think that's better for the investors because people can more easier for them to understand where the value comes from. And then also the thirdly, they're tying up with non-US companies, right? Like a Tether is one thing. Another one is a SoftBank. MicroStrategy is a purely 100% US company. So I don't know how that's going to be received in the market. But SoftBank is actually contributing about $1 billion worth of a BTC as a seed capital, right? So that's quite significant. But I think maybe it was masked in this new headlines because this means that the SoftBank is actually is buying Bitcoin using $1 billion worth of cash. So that's quite substantial. And Tether also is another company, that's quite meaningful. This hugely profitable company, and I think they've been looking for ways to diversify their business away from the the standard Bitcoin issuance business where your income is basically the interest income from owning the treasury, but they want to, like, I think they've been looking for ways to maybe venture into some other types of crypto business, and I think this is the one that they found that probably fits their model quite perfectly. So I think there are these sort of differences there that makes it interesting and unique.
Yeah, I tried to ask Perplexity what's the difference between MicroStrategy and 21, the 21 fund. I mean 21 Capital, and I think it was only the funding mechanism and how they went public. For example, 21 Capital, they're a SPAC, and MicroStrategy, they just went through a traditional IPO. And as you mentioned, 21 Capital, they have a very pure Bitcoin maxi philosophy behind their it's called Bitcoins per share. They measure their success as how many Bitcoins they own for one share. So that's quite of a fun way to put it. And Jack Mallers, he's a very passionate guy. So it's pretty interesting that these really, really big companies like SoftBank, Tether, they're coming in and buying, and it makes me wonder who else is doing this in the shadows. Like, will the Saudis will be buying? That's what I wonder sometimes. But yeah.
I mean, I think to be fair, MicroStrategy actually pioneered the concept of Bitcoin per share. They use the term BTC yield to describe the growth rate of Bitcoin per share from one reporting season to another, and they use that as a KPI for their share performance. So many of the things that the 21 is doing is simply just following a lot of practices and mechanisms that the Michael Saylor has pioneered, and I think we got to give you credit to that. But I think the interesting part is those 3 points that I mentioned. Also, one more thing that I forgot to mention is the fact, because they start from a low base compared to MicroStrategy, the per dollar impact of a Bitcoin, per dollar impact of a cash deployment to purchase Bitcoin is going to be greater for 21 than MicroStrategy. What I mean by that is that if you buy, let's say, 100 BTC in the market, what that represent in terms of growth of BTC per share is going to be much greater growth for 21 versus MicroStrategy, which already has like 500,000 BTC. So it's a bigger impact for 21. So if you're somebody looking for big delta, then maybe 21 is a better play.
Why wouldn't other companies try to follow the playbook of 21 Capital again? Like, it seems like 21 Capital, they're doing this for a reason. I mean, they say they have a mission, but obviously investors don't do this if it doesn't make them money. Why wouldn't another competitor come out and ruin their business, basically create more competition?
Yeah, I mean, that's a good question. I think, in my view, I think more companies should pay attention to these developments. I mean, only reason I can think of is because they're intellectually lazy. And this just the idea around Bitcoin is still, maybe it's way too new to them and haven't wrapped their heads around this concept, or they don't fully understand Bitcoin. So I think that's the only reason. And I think, granted, I think, bigger companies, like large scale companies like a Microsoft or Facebook, they have less incentive to do so because they already have a very dominant, thriving business and they are the leaders in their own field. But it's usually those companies that are X growth and struggling to find a source of growth, and maybe going through some difficult periods, but looking for some way of figuring out what to do next. I think that type of companies tends to be more open-minded, and I think these type of companies should definitely look at this strategy.
Rick, do you have anything to opine on this issue?
Not really. No, it's just like an equity wrapper of Bitcoin, so it's not super interesting. But I guess if you just want that, almost like a leverage exposure, if they can manage to increase the Bitcoin yield, quarter on quarter, like what MicroStrategy is doing, then it makes sense. But yeah, there's nothing that's stopping anyone else from doing it. Nothing that's stopping like a company with a more focused direction. Because I feel like the description of what they were saying about the other services they might offer, what that's what Cantor was saying, that they would do like Bitcoin services. It's pretty broad, I think, what 21 is saying they're offering. So it's not super interesting. It feels like it's just like that not traditional, that common SPAC where it's a very targeted business model. It's playing on whatever is interesting at the moment, although the size of this is pretty insane. But it's not quite like a revolutionary idea or even mechanism, which is more just like a copy of Michael Saylor's strategy.
And I think there are more people trying to not copy, but somewhat get on that bandwagon of buying Bitcoin, which is Arizona State, which you guys put on the daily market brief on the 29th of April here. I'll just share this screen here. Arizona's Bitcoin reserve bill has cleared both House and Senate, a major milestone, and now awaits Governor Katie Hobbs' signature. So what does this mean? Does this mean that they're going to actively buy Bitcoin with their tax revenue? Like, what does this mean?
Not yet. So just to be clear, it has not been enacted yet. So the way that legislation works is, the lawmakers vote, and if it goes through both chambers, and then it goes to the governor's desk, and the governor has to sign it. Then it becomes a law. So similar to how the Congress and the White House works. So right now the lawmakers all approved it. So now it went to the governor's desk, and then she has to decide what she's going to do with it. Either sign, like approve it or disapprove it. So I don't know how soon she will come to a decision. I think in the next few days. But if she signs it, then it becomes a law, and then that means they'll put in I think fresh dollars into Bitcoin. So
that's kind of crazy if you think about it. Like, what are the incentives for a state to hold Bitcoin? Just to generate more returns to their like pension funds? Like, what's the point of doing this all?
Yeah, so it's just like any governments, you have liabilities. Yeah, it could be pensions. It could be, you have to pay your own government employees. And the only source of revenue, usually only source of revenue for governments are just tax, right? So you have this tax revenue and you have these expenditures, and the surplus has to be kept somewhere in a store of value, and usually maybe they hold treasuries and maybe real estate, some other assets, but some of that now can go into Bitcoin if this legislation gets enacted. So that's what it is. It's no different from government owning any other assets.
I think the proposal was it would consist of two things, like seize crypto, and they can also like legislative purchase appropriations or purchases or something, which is like 10% of their fund annually. The seize one, I think, has always been something that comes up. Like Germany versus US was a good example last year, but when countries or states seize Bitcoin, they sell it, and it's always like a dumb decision. And for the buying, it's a good way to just like diversify their state reserves. But I think what's interesting is the more like signaling aspect, like the political, ideological signaling that they can do by just passing this. So even if they go nowhere near the 10% annual purchase cap, just by this passing and the governor signing off on this is a pretty interesting way to like signal. And especially because it's not a state that's particularly tech attractive, maybe by doing so you can put yourself on the map for the next generation or whatever. So I think that's a cool like aspect of it, not just the physical like mechanics of it, but just this way you can signal to the world or within the states that you're leading or you're trying to lead this like digital assets movement.
So Rick, you're saying that the state of Arizona actually have a seized assets? Is that what you're saying?
I don't know if they do, but I think the proposal covers two things. It's they can hold on to their seized assets. So before, if states or whatever had seized Bitcoins, there would be a plan to like sell that because they couldn't hold it on their balance sheet. But now, or their reserves. But now this proposal allowed them to hold on to any Bitcoins seized through like criminal proceedings or whatever. And then the second was the buying. which I think it was called like appropriations or something like that. But yeah, I'm not sure if they do have any right now.
Right. I mean, it's interesting that I thought some other states like Wyoming, for instance, is gonna be the first one, but they actually ended up rejecting it. And now somehow Arizona is on the potentially can become the first state to do it. So
Is Wyoming trying to like distance themselves from crypto, or like was that why they rejected?
No, it's just I think they didn't go through the lawmakers, so there's not enough lawmakers that approved it. I think. I mean, the Wyoming Senator Cynthia Lummis is very pro Bitcoin, right? So, but she's not the she doesn't she doesn't run the show by herself. Like the it has to go through the I don't know how many lawmakers they have there. So, but you have to get the majority like a consensus approval from all the lawmakers, and they didn't secure enough votes to move to the next stage. So yeah, it was rejected, I think.
Yeah, I think they had like some negative backlash from all the DAOs that were approving, like DAOs as legal structures.
Like City DAO, that kind of stuff.
Yeah, and then because they became like the state home for DAOs, so and this was last cycle, right? So I think there was like a bit of pressure or backlash within. Because when these DAOs got sued, it was Wyoming legal structures that were being sued. I'm not sure if that's why lawmakers voted against, but because it's interesting because last cycle they seemed to be so pro crypto and almost like, oh, you can have like a physical place, this decentralized community, these DAOs can have a physical home here. They don't want Bitcoin anymore. So yeah.
Probably because Wyoming is also a blue state and Arizona is kind of half and half. So I think there will
Wyoming is a red state.
It's a red state. Okay. I didn't know that. I'm sorry. Wyoming is a red state, but still, I guess they don't want to spend money on dumb internet money.
Yeah.
So, and also like the DAO stuff, it might be not a good idea to spend money when we have looming risks of a recession. So recently, I think it was like 2 or 3 days ago, this fund called Apollo, they released this recession report. It's kind of scary if you look at it. So basically, the report was kind of interesting to me because there's not much words in it. They only show a bunch of charts which do not look quite good. For example, heavy truck sales, they're going straight down. And also CEO confidence is going straight down. Of course, that doesn't mean we're going into a recession, but a lot of people are thinking. And most importantly, the container ship counts are going straight down. I've seen screenshots of people trying to buy stuff on Temu and they get hit by 145% surplus charges on their purchases. And now I guess even the MAGA folks are complaining about this phenomenon. And basically in this report, they said that since Liberation Day, which took place on the 2nd of April, it will take around 20 to 40 days for all the ships to reach the US. And from there, they're not going to be more supply of goods coming from China. So basically, the trucking industry will go broke in, let's say, maximum 20 days. And then the US will see empty shelves and the retail market is just gonna get destroyed. People are gonna get laid off, and therefore we're going to get a recession in the summer of 2025. So I guess the thing we should try to guess is if China and US will get into an agreement, and will Trump let this whole thing roll? Like, what will happen if this whole projection actually comes to real life? What are your thoughts, Peter?
Yeah, so there's no doubt that the current there's a standoff with the China and also with the rest of the world, I think is hurting the economy on both sides. But we have more data coming out of US than China doesn't release too much data, so we don't hear much about them. But I mean, I think both sides are suffering. It's a matter of whether you can how much you can withstand psychologically, and on that front, I think China's probably better off than the US because it's a more controlled society. And all these signs, I think, I mean, it's no surprise that the economic activity is kind of going through contraction because so much uncertainty. People don't want to import or engage in business transactions when you don't know what your price is going to be in the next few months. So that's why you see the general contraction, the economic activity across all industries. And I think you're gonna, if nothing happened, I mean, like if this standoff continues, then I think it'll just get slowly worse and worse and worse. I think the good news is that it appears that I think they want to strike a deal. So I think slowly they are making progress. Also based on all the anecdotes and all the kind of noise coming out of the DC and other parts of the world. And also I think in Korea there was a headline. I think it was this yesterday or today that so Korea is very close to like coming to an agreement with the U.S. That then I think talks about their U.S. is very close to some countries in Asia with the deal, and people speculate it might be India, Korea, or Japan. So I mean we'll see. But I think these things all indicate that it'll set a good precedent for other countries to maybe hurry up and strike a deal. I mean, I know China's got their own kind of chips on the shoulder, and maybe it'll take a little longer. But I think general direction is towards coming to some sort of an agreement. So I think if that's why I think if you look at some market signals, the volatility that we saw in April is coming down. So for instance, like a MOVE index, which captures the volatility of the treasury market, it has kind of normalized quite a bit. The treasury yield has normalized a bit. The only thing that has not normalized is the high yield bond market, which basically indicates that medium-sized corporations in the U.S., the people are concerned about their potential bankruptcy risk, right? So that's why the high yield rates still kind of remain at the elevated level. But it did come down a little bit from April level. So I think never say never, but I think if I had to guess, my guess would be that between now and maybe before the summer, we'll be closer to resolving this issue than we are at the moment.
How would you bet on this topic, Rick? Would you try to buy up stuff and prepare for the apocalypse if you were to live in the US, or what are your thoughts?
Not sure, but I guess the analysis kind of misses the point that people or businesses or whatever can stockpile, or maybe did stockpile ahead. But I don't know. It feels a bit sensationalized. I found this a polar report from December last year. It was a 2025 outlook, and it's titled "The U.S. 2025 Economic Outlook: Firing on All Cylinders." And they seem to be a lot more optimistic there, even though they did mention Trump's tariffs and 10% tariffs across the board and higher ones for Mexico and Canada. They seemed a bit more optimistic there. So maybe they like to be a bit sensationalist. I'm not sure. But yeah, I don't know. It seems a bit aggressive without really considering that things can get better and deals can be made. If they were to be believed, I guess you monitor supply chain stuff, trucking and ships, like you were showing. And then any like high frequency employment data, because it seems like that's one of the like keys they've been focusing on. But a formal recession by June, which is next month, basically seems a bit compressed. I don't know. Are we seeing like tightening credit and consumer collapse already? I don't think so. So yeah, it seems like a bit of a sensationalized outlook.
To me, it kind of reminded me of the COVID supply chain shock thing. Like right now, it's more of a man-made disaster, I guess. But back when COVID hit the world, we had a virus, therefore nobody was able to like ship things to around the world. So everyone was, economic activity went really down. Therefore, we got a very sharp and short-living recession type of situation. So I think this might be that type of things if we don't get deals in time. So I'm trying to tread very carefully on the current situation. Well, I I think it was like last week or the week before that I told you guys I was now buying Bitcoin, but yeah, I'm like, okay, well, let me DCA more carefully. And if we get a dip, I think this might be a big opportunity. But again, this is not something that we can like overcome by like deploying vaccines and seeing, peace to the world and kumbaya all together. This is basically a conflict between two nations trying to take the bigger pie of the world economy and, world politics. So, yeah, I think, it has some similarities to COVID, but I think we should look at it in a very non-biased lens right now. Yeah.
Okay, so so you said you want to be more careful with the pace of purchase because recession's coming. Is that your concern?
Yeah, I might be buying the top right here. So I gotta be very careful. I think I'm gonna DCA a little more less, but let's see what happens in the summer. And I mean, I could be totally wrong though here, because last time I created this video on my own YouTube channel, talking about like the Blockworks guy, talking about how Bitcoin is being the trade after the trade of gold. So like we talked earlier in this podcast, even a lot of people like the guy from Coinbase, he was saying that these sovereigns and these big funds, these institutions, they're piling into the Bitcoin trade because they missed out on the gold trade. So if that is true, and if nations, they print money or do whatever, and they have like money to throw away, then that money can come into Bitcoin because Bitcoin is a bit of a more neutral asset, which is the thesis of the Blockwork macro guy. That's what he was saying. So it's I don't know, like it's a very quantum state type of thing, we might go really bad, but again, in these bad situations, Bitcoin be the biggest benefiter. So yeah, I'm quite in a hard spot here.
I guess just go long Bitcoin, short alts. I feel like regardless of the outcome, it's just limiting the possibility that people will like punt altcoins, and so you can probably just be safe buying Bitcoin as long as you're short alts against it.
Yeah, that's the best way to go. And speaking of Bitcoin, we need to talk about the MVRV report that Peter and Jaehyun put out from Presto Research. Let me just share the screen. So it's the title is Valuing Bitcoin, MVRV as a lens, not a crystal ball. Well, I've heard of the MVRV index. Is that what it is? The metric?
Ratio.
Yeah, ratio.
Yeah.
But I don't really know what it really means. So Peter, why don't you tell us what it is?
Sure. Yeah. So I mean, this is kind of, I have a interest in valuation, coming from my equity background. I like figuring out ways to value things. If there's like a systemic way of doing so, yeah, I'm interested in knowing what it is. And my approach to Bitcoin was also coming from that angle. And it's really funny. I was having dinner with my old friend from my TradFi banking days, and we got into this debate about whether Bitcoin has a value or not. I mean, it always comes up, and his biggest, I guess, the issue with the Bitcoin is that with equity he knows how to value it. With the Bitcoin, he doesn't. So whether you know how to value something or not, I think is the biggest kind of mental block for many people in the traditional finance. They immediately think that because I don't know how to value something, because I don't have the framework, this thing is bullshit. I think that's usually how the TradFi people kind of think about Bitcoin. So it's a topic that I'm very interested in because I frequently talk to these still my ex-colleagues and friends. So MVRV I think is interesting because it has emerged. I mean, it became known to the public maybe around late 2018, 2019. It was pioneered by people in Coinmetrics. I think Eric Carter has done a good work on it, and then slowly emerged as one of the most popular valuation framework for Bitcoin. When the way it works is quite similar to price to book ratio in equity. So when you think about price to book ratio, well, MVRV, MV stands for market value, and RV stands for realized value. So MVRV ratio is basically market value divided by realized value. Market value is simply market cap. Realized value is it's also a way of measuring Bitcoin network's value, but only based on the on-chain transaction. Last time it transacted on the blockchain. So every Bitcoin changes hands on blockchain at a different prices. So you have to kind of aggregate all of them. You have to assign different price points to every transaction that take place on the Bitcoin blockchain and then aggregate it. So it's like a weighted average of all the transactions. Usually comes out lower than market cap because there are so many Bitcoins that are lost and for whatever reasons, it does not get traded on the blockchain. It's just kind of dormant. So if it has the effect of marginalizing this non-inactive circulating supply, and that's why you end up having a number that is kind of lower than market cap. And that ratio, so you compare market cap to the realized value, and then you get some ratio, usually 1 point something, or if it's below, sometimes it goes below 1. So if it goes below 1, then people usually attribute it as a oversold. If it goes above 3.2, then people attribute it as being overbought. And that's how kind of people come up with a judgment on whether market value of a Bitcoin at the moment is too expensive or too cheap. So that's how. So it's kind of similar to price to book in equity, because price to book is also a little bit like that. Price is market cap, book is book value. It's basically asset minus liabilities, and the residual value is you consider that to be the true value of the company, and then you compare that to like accounting value of equity. You compare that to the market cap and figure out whether something is too expensive or too cheap. So it's a little bit like that, and then that's how it became. It's kind of simple metrics, and then it's easier to understand, and that's why I think it became popular over the years. But what I wanted to say in this report is that implicit in when you compare the current MVRV ratio or even price to book ratio in equity to the past valuation, implicitly you're assuming that the things haven't changed. So other things being equal, centris paribus in Latin. Only then this comparison makes sense. But maybe it's okay in the traditional finance world where the industry dynamics don't change that often. So maybe it's safe to make that assumption. But in crypto, in Bitcoin, because things change so fast, and then and also the market participants, and then Bitcoin, the nature of the Bitcoin network and everything, it changes so much that maybe making this historical comparison is not as relevant as you'd think. So we actually go through these reasons. The fact that maybe there are not as much on-chain activities taking place on Bitcoin, compared to 10 years ago, for instance, maybe makes this historical comparison less relevant, and so on and so forth. So I go through these, some of the reasons why making this historical comparison may not be so relevant. And then the conclusion is that does that mean that the MVRV is useless? No, it's not, because I think people often think that the only reason why you need this valuation framework is because it predicts price. Yes, it can predict the price, but that's not the only reason why it's useful. In traditional finance, let's say in equity, for instance, like a price to book, price to earnings, DCF, all these things are still popular, not because they predict prices accurately, but because it provides way for you to understand the value drivers for each of these asset classes. So, applying the same kind of a principle, MVRV, okay, maybe it's not a perfect price predictor, but it's something that helps you understand the fundamentals better, and that's why it's useful. So we should continue to learn how to utilize this tool. And also, I also mentioned that. Sorry, I'm getting a little bit longer here, but the Bitcoin is a very young asset class, only 15 years old. Equity valuation method, it took 300 years between the emergence of the asset class in the 17th century until they come up with the valuation methodology like DCF or price to earnings in the 1920s. There was a 300-year gap. So compared to that, we are at the very early stage in terms of understanding Bitcoin and how to value it. So no need to panic or rush or anything. We should continue to engage in this type of conversation and bring more people to understanding the existing valuation metrics, so that industry as a whole can come to an agreement on, what's a good way to measure the value of Bitcoin.
Recently, I kind of got into a debate between me and my friend too, that how to he didn't see how to value Bitcoin, and I was like, well, just like gold, it's a neutral asset, and that's why people are buying it. I guess that was my argument. But he was like, well, gold, it actually has physical demand to put into electronics, whatever. But I was like, well, bro, the volume, the trading volume of gold that will be used for physical demand is, I bet it's like not even a fraction of the speculative demand. So what's the point of making that point? So yeah, I think Bitcoin, these valuations and how to value it, I think most people, I don't know if it's refusing to understand, but it has a lot of philosophy behind it. So I think they should just listen to Bitcoin Maxi podcasts a bit more. Maybe just try to listen to good, well-spoken educators.
Listen to Presto podcast.
Yeah, listen to this one. Yeah.
No, actually, but I think the number one thing to remember about valuing Bitcoin is, in my view, is realize that it's a network, and there's a way of valuing network. It's called the Metcalfe's law, and it's basically, the basic framework is that the value of network is in proportion to the number of users, number of he used the word more technical words, nodes, but it's the same thing. People who participate in that network, the greater that number is, the greater the value is. And then the Robert Metcalfe in the early 80s, he even came up with a mathematical formula for it. So I think that's number one thing to, I think, you don't have to know the formula, but conceptually, I think that you should understand the value of a network is in proportion to the number of users. And that once you get that, then I think, you begin to understand where the value comes from, and you don't continue to ask this question, oh, it doesn't have a cash flow, so it's not useful.
Rick, how do you you're perpetually long Bitcoin? There must be a reason. How do you maintain that Giga Chad mindset there?
Probably just mental illness. And also, I'm not wasting my time arguing about Bitcoin valuation in my private time like you two are. So I only have positive influences around me, i.e. everyone else is also mentally ill and buying Bitcoin. But I never really think of valuation that much. I feel like for Bitcoin, like what Peter said, it's a network. And then if you wanted to value it as an asset class and think of it in the truest form of what Bitcoin claims it is and all the things it's meant to hedge against, and given the scarcity and stuff, it's almost like a binary valuation. It's either zero, like it's actually worth nothing, or it's worth a really, really high number, which is just based on the demand. And the report is good. It talks about how these things aren't really static, how you value things and how you view things need to develop over time. And in that sense, I feel like people get a little bit caught up, not in looking at Bitcoin from a 2017 perspective, which is already an issue maybe, but looking at Bitcoin as another asset class. I think a lot of the TradFi people arguments tend to view it from an equity lens or a commodity lens or whatever it is, but that's not really how you view Bitcoin. So the base of where they're starting from is already wrong. So these arguments kind of go nowhere, because you can't. It would make no sense. If I was saying, oh, how you're valuing oil doesn't make sense because in FX we look at the interest rate differentials. Someone would say that makes no sense. We're looking at a completely different asset. But I feel like a lot of TradFi people love to look at whatever asset class they know best and try and layer or project that onto Bitcoin or crypto, or they try and draw commonalities and then say, therefore, this is how we should look at it. But it's a completely different thing. And trying to argue with those people, I think, often goes nowhere. And I think we've maybe said this on the podcast before, but if by now they haven't really found a way to adapt their view and look at Bitcoin or crypto as an asset class from a totally different lens, they're probably never going to, because I think Peter said it last week. There's no excuse right now not to own Bitcoin. There are so many ways you can own it. And then like 21 is a good example now. Like there's going to be like a pure equity play to it. So yeah, I mean, I don't waste my time arguing with these people. So maybe that's why I'm always long.
Yeah, I mean, I think I definitely resonate with your. I mean, sometimes I feel like it's a waste of time. I do feel that, but then at the same time, I feel like I have to do it because the reason for that is, yeah, no, it's just I want to contribute to the growth of Bitcoin somehow, but I'm not a developer, so there's like I cannot contribute commits or anything like that. I'm not with my background, I don't think I can launch some new service that's built around Bitcoin like Jack Mallers does with the Strike. The only thing that I can do, I think, is bring in more investors into this network. And the biggest group of investors are people in traditional finance. About $500 trillion worth of assets are being managed by these traditional finance institutions. So the best way I feel for me to contribute to the growth of the asset class is persuading maybe some of those people, maybe not everybody. I know I usually fail. Well, I talk to maybe 10 people. Maybe I'll be lucky if I get 2 people to agree with me. I actually did, I counted number of people that I talked to from my traditional finance background and how many of them actually ended up buying Bitcoin. It's very little, actually. It's a bit sad, but it just goes to show maybe I'm not very effective. But I feel like I should continue to do it, even if these like a 10%, 20% people convert. That's still good enough. So. And then in order to talk to them, I think all of us have to play that role a little bit amongst our own circle of friends. And I think we do. I'm sure we do, right? Like people will come and ask you, how's that Bitcoin thing going? And you kind of get dragged into that conversation sometimes. But I think developing a good way to handle this type of situation eventually over the long run, I think it pays off and it's good for Bitcoin, I think.
Yeah.
Start going door to door. Have you heard of
our Lord and Savior
Nakamoto?
Bitcoin?
Or go on CNBC and talk about it.
Or go on CNBC,
yeah. I saw your interview. You were projecting 210K.
Yeah, 210K.
That's a big number.
Well, nobody mentioned that how 21 has a special meaning in this industry, right?
Is that why you came up with that number?
Well, I mean, no, I actually used the MVRV to estimate. So I made an estimation for realized value for the end of this year and applied, I think, 3 times multiple to come up with that. And then it's a little less. I think it is like a 213,000 or something like that. But I just kind of rounded off, and made it to 210,000 because I love the number 21.
21. Yeah. Anyways, I think we have enough content here for today. It was good. It was good listening to how y'all were not convincing and just doing your own thing, just buying Bitcoin, stacking sats every day, and mocking people who are trying to make your bags even heavier. Rick.
Yep. No need for that kind of negativity.
Yeah. Anyways, I think we can just try to see what happens for the next week and stay safe.
All right. Thanks, guys.
All right. See ya.
Bye.
Bye-bye.